How to recover from financial disaster. The illiterate investor. Financial disaster rarely arrives with a warning. Sometimes it begins with a layoff. Sometimes with a failed business. A divorce can also trigger financial hardship. A medical emergency may have a similar impact. A market crash can also lead to financial instability. Sometimes, a series of small financial mistakes gradually leads to overwhelming debt. Financial security can disappear unexpectedly. Suddenly, you may face financial challenges that seem insurmountable. If you are currently experiencing financial hardship, please consider the following. Financial disaster is not permanent. Many of the wealthiest people in history have gone bankrupt, lost fortunes, lost businesses, and lost everything they owned. What separated them from everyone else was not luck. It was their ability to rebuild. We will outline a step-by-step approach to financial recovery, not with wishful thinking, not with lottery tickets, not with get-rich-quick schemes. Instead, we will focus on a practical, proven roadmap. Financial recovery is not a matter of luck or magic. It is a process that requires commitment. It begins today. When a ship is taking on water, the crew addresses the leak before considering cosmetic repairs. They stop the leak. Financial recovery follows the same principle. The first step is not to invest. It is not to buy cryptocurrency, nor is it to seek stock tips. The priority is to prevent further financial harm. The Financial Consumer Agency of Canada recommends creating a budget, reducing expenses, avoiding new debt, and contacting lenders early when financial difficulties appear. The sooner action is taken, the more options are usually available. Consider the following questions. What is causing the damage? Is it overspending? High-interest debt? Too much housing cost? A vehicle payment? Lifestyle inflation? A loss of income? Identify the source of the problem. Then take steps to address it. Cancel unnecessary subscriptions. Pause all non-essential spending. Sell items you no longer need. Reduce expenses as much as possible. These measures are temporary. Continue until you regain financial control. Every dollar you retain strengthens your financial recovery. Many individuals postpone financial recovery due to apprehension about confronting their financial realities. They often refrain from reviewing financial statements. They may disregard communications from creditors. They also cease monitoring their account balances. However, a lack of awareness does not alter financial circumstances. The initial step toward financial recovery is achieving clarity. Document all outstanding debts. Record each financial obligation. Identify all sources of income. Catalog every recurring monthly expense. Ensure that all financial information is systematically documented. This process may cause discomfort. Nevertheless, uncertainty frequently generates greater anxiety than confronting actual financial conditions. Nevertheless, uncertainty frequently generates greater anxiety than confronting actual financial conditions. Empirical research on financial recovery consistently demonstrates that systematically assessing debts, income, and expenses restores a sense of control and establishes the foundation for an effective recovery plan. A problem cannot be addressed if it is not accurately measured. Quantitative data should not be perceived as adversarial. Such data serve as a guide. Guides provide direction toward solutions. Do not aim for perfection. Avoid complex spreadsheets. Disregard costly financial systems promoted by gurus. At this stage, a survival budget is essential. Concentrate on these 4 priorities: housing, food, utilities, transportation. All other expenses are secondary. The objective is straightforward. Keep the lights on. Keep food on the table. Safeguard your capacity to earn income. Many financial institutions recommend prioritizing necessities first while temporarily reducing non-essential spending. This budget is not intended as a permanent solution. It serves as your recovery plan. Consider it similar to a cast for a broken arm. Temporary, necessary, life-saving. Stop digging the hole deeper. A common mistake during financial hardship is relying on debt to address existing debt. For example, some use one credit card to pay off another. Others refinance multiple times. Some borrow additional funds to maintain a lifestyle that is no longer sustainable. Continuing to accumulate debt often worsens financial problems and delays recovery. If possible, avoid taking on new debt. Aim to live below your means. This applies even if your resources have temporarily decreased. This is not failure. It is a strategic decision, just as a general may retreat before launching a successful counterattack. You're taking a similar approach. However, avoiding communication can lead to greater financial consequences. Financial institutions may provide temporary relief programs, payment arrangements, interest reductions, mortgage assistance, or other solutions based on individual circumstances. Reaching out early increases the options available. Contact your lender directly. Clearly explain your financial situation. Inquire about available hardship programs. Ask if payment extensions are an option. Request information on possible interest. Discuss the possibility of loan restructuring. Ask about restructuring. The worst outcome is that your request may be declined. However, many individuals do not reach out. As a result, they miss the opportunity to explore available options. There are only two ways to improve cash flow. Spend less. Earn more. Many people focus solely on reducing expenses. However, increasing income often leads to the most significant improvement. Consider the following questions. Can I work overtime? Can I freelance? Can I tutor? Can I drive? Can I sell a skill? Can I start a side business? Can I sell and use possessions? Recovery becomes easier when you increase your income. Even a modest increase of a few $100s per month can significantly accelerate your progress. Not all debt is equal. Some debts quietly destroy your future. Credit card debt is one of them. List your debts by interest rate. Focus extra payments on the highest rate debt first. This strategy saves money and accelerates recovery. Some people may also benefit from debt consolidation if it lowers interest costs and simplifies repayment. Debt is like carrying rocks in a backpack. The heavier the rocks, the slower you move. Remove the heaviest rocks first. A primary reason financial setbacks escalate into catastrophes is the lack of emergency savings. In the absence of savings, unexpected expenses can quickly develop into financial crises. A broken transmission, a medical bill, a furnace repair, a lost job, building an emergency fund that can eventually cover several months of expenses. Do not wait until you are debt-free. Start small. $20, $50, 100 regular contributions are more important than the initial amount saved. More than size, the goal is not to become rich overnight. The primary objective is to build financial resilience. Financial disaster affects more than just bank accounts. It also undermines personal confidence. Many may begin to perceive themselves as failures. However, experiencing financial loss does not equate to personal failure. People recover. The most important asset you possess is not your money. Rather, it is the ability to create value. This includes skills, knowledge, work ethic, and determination. These assets cannot be repossessed. They cannot be subject to foreclosure. Moreover, they provide the foundation for rebuilding all that was lost. If you're facing financial disaster today, remember this. You do not need to solve everything this week. You only need to take the next step. Create a budget. Stop unnecessary spending. Talk to creditors. Increase income. Pay down debt. Build savings. Repeat. One step, then another, then another. Financial recovery rarely happens in a dramatic moment. It happens quietly. One decision at a time. One paycheck at a time. 1 month at a time. One habit at a time. Because the truth is this. You may have lost money. You may have lost a business. You may even have lost everything. But as long as you have the ability to learn, work, and adapt, you have not lost your future. And that future can begin today. If you found value in this video, subscribe to the Illiterate Investor. Here, we do not chase shortcuts. We build real wealth. One habit, one decision, one investment at a time.